Hello students, how are you all doing? I hope your preparations are going very well. As now exams are reality, this is very important video that I am making. This video will definitely help you to remember the math provisions even after your exams also. So you don't forget the math provisions if you study like this. And I linked the math provisions with the IPL teams. So that you will never forget about these provisions even after your exams also. You will easily able to remember. So I created one statement. With that statement you will able to remember. And the reason that I am making this video is institute sometimes will give you the adjustment related to the normal income tax provisions. At the end of the question, they will ask you to calculate the book profit as per the MAT provisions. So for example, they will give you 43B related adjustment, or they will say some amount they have paid without deducting the TDS. So like this they will give you, and they will give you depreciation as per the WDV. And you thought you need to make the adjustment or not. That will be the confusion. So to remove this confusion, I created this single statement. With this statement, you will able to remember, you will able to recollect the provisions easily. So what is the trick? First, we will learn the trick. Then I will tell you how to link with the provisions. The trick is here you can see on the screen, and you can download this particular single page from the description also. And this trick is like IPL fan of DDD RR LSC exempted from the royalty business diminution. So what is this meaning? IPL means our IPL, and fan. So we are all fans of DDD. DDD means Delhi Daredevils. And now it is Delhi Capitals. Earlier it is Delhi Daredevils, right? So DDD, RR Rajasthan Royals, and Lucknow Super Gates LSG means are exempted from what? Royalty business diminution. Royalty business diminution. So don't try to get the logic out of this. This particular sentence. There is no logic to it. I just made it only for your memory. Okay. Now, what is meant by IPL first? Now, I will link these particular statement with the below table, below mat provisions. This provision I am giving you only highlight. I am not copy pasting the entire provision here. For entire provision, you can actually refer your material. Okay. Because it becomes very lengthy now. If I copy pasting every provision into this sheet, it becomes very lengthy. And second thing is, before watching this video, I want you to cover the mat provisions first and then come here. Otherwise, it becomes a little more confusion to you because we have not studied the mat provisions yet. Now, first thing IPL. What is meant by IPL? So I means income tax paid or provision made if it is debited to the P&L. That is the first statement. Okay. And if you see here, trick here, add back to profit if these are debited to P&L, deduct from P&L if these are credited to P&L. I cover both the things in one go because in MAT process what will happen is exempted income we need to deduct. At the same time, expenses related to exempted income we need to add back. So both the adjustment will be there related to the same income. So I put in a table wise. That's the reason why. The first thing is I related to income tax paid or provision made, that we need to add back. That is one. And then P, provision to meet the unascertained liabilities. Unascertained liabilities are contingent liabilities. Unascertained, not ascertained liabilities. Unascertained liabilities are contingent liabilities. That is called P. And L. L for losses of subsidiary companies. Losses of subsidiary companies, if they make any provision, that provision we need to add back. That is called IPL. IPL is over. Now FAN. F means expenditure relatable to income accruing to the foreign company from capital gains, interest, dividend, royalty, etc. Now you are able to recollect. Okay. So F means expenditure relating to the income of the foreign company. Relating to what? Capital gains, interest income, etc. etc. Now not only the expense you need to add back, at the same time income you need to deduct. Income accruing to the foreign company from the same related source of income, that also you need to deduct. So both the adjustments in single row. Now A means AOP BOI. So A means AOP BOI expenses related to share of expense. At the same time, share of the SSC relating to the AOP and BOI business. If it is credited, you need to deduct. If it is expense related to debited, you need to add back. Okay. And then N means notional loss on exchange of shares of SPV, special purpose vehicle, with units of business trust. So that if there is a notional loss with the exchange of shares with the business trust, that notional loss you need to add back. At the same time, if you get any now notional gain, that you need to deduct from the P&L. That is called FAN. IPL FAN is over. Now DDD, Delhi Daredevils. So Delhi means dividend paid or proposed if debited to P&L. Similarly, Dare means depreciation. Another devils means deferred tax. These three. Deferred tax can be an asset, can be a liability. If it is an asset, you need to deduct. If it is a liability, you need to add back. Similarly, depreciation also. Depreciation, you need to add back entire thing, whatever is debited to the P&L, and you need to deduct the entire depreciation. If there is any depreciation which is relating to the revaluation of asset, okay, revaluation of asset, you need not add back. Remaining depreciation only you need to deduct. I hope that you have already learned this concept of MAT. Now, our next team is Rajasthan Royals. What is R means? R means revaluation reserve. So if it is debited to the P&L, add back revaluation is relating to an asset which is sold or disposed. If any revaluation reserve related to the asset which is sold, disposed or retained, that you need to add back. At the same time, you need to deduct the revaluation reserve. Deduct revaluation reserve credited to the extent of depreciation on revalued asset. So depreciation on revalued asset, for example, if it is 100 is debited, and revaluation reserve credit is 120, how much you need to deduct? Only 100, not 120. So that is the logic behind this particular adjustment. I hope you are already clear about this particular provision. Now, royals. Next, again another R. This R means reserves. Amount carried to reserves if the same is debited to P&L. At the same time, amount withdrawn from reserves if it is same is credited to the P&L. First one is related to revaluation reserve. Next one is related to anything other than the revaluation reserve. Okay. Now I'm going to the third team. Third team is Lucknow Super Giants. What is meant by Lucknow? L means loss on transfer of units acquired in exchange of shares of SPV with business trust. If there is any actual loss of exchange of shares of SPV with business trust, that actual loss you need to deduct. Okay, that is one adjustment. And second, S means super. Profits of S means sick. Okay, profits of sick industrial company. Profits of sick industrial company you need to deduct. At the same time, the last one, G. So instead of G, you read it as U. I tried in many ways, replacing with other team name, etc., but nothing as successful. So this is the only adjustment that you need to remember. Instead of reading as LSG, you need to read it as LSU. U means what? Unabsorbed depreciation. You need to deduct bought forward or unabsorbed depreciation. Bought forward loss or unabsorbed depreciation. So loss I need to mention here. I will mention it in the PDF copy when I'm sharing it. Here only bought forward is there. So deduct bought forward loss or unabsorbed depreciation. There are some sub clauses were also there where if the application is made under section 241 of the Companies Act, if in case of any other companies, you can read that in your material. I'm only giving the highlights here. So that is what LSC means. That is LSU means. Okay. Now exempted. What is exempted? I'm again going back to the statement here. So statement is what? IPL fan of DDD RR LSC. Till here we have completed. Exempted from what? Exempted from royalty business diminution. So exempted means exempt income. Simply exempt income means section 10 section 11 related income. If it is a income which is credited to P&L, you need to deduct. If it is an expense relating to these exempted income, you need to add back. That is called exempted means. Now exempted from what? A royalty business. Royalty business, the expenses related to the royalty as specified in section 115 BBF. Royalty, if it is any expenses related to the particular nature of royalty, you need to add back. At the same time, if there is any royalty income which is credited to the P&L, you need to deduct. That is what this adjustment means. So exempted is over, royalty business is over. Now the last one is what? Diminution. Business diminution. Royalty business diminution in the sense provision for diminution in the value of any asset. Provision for diminution in the value of any asset. If there is any provision which is created which is a diminution to the value of asset, that you need to add back. That is the last point. So this is all about the MAT provisions. I created a summary. I hope this is really helpful to you. If it is really helpful to you, please share this video with others. At the same time, you like this and subscribe to this channel. Stay with me. I'm going to provide the important information to you. So thank you so much. All the best for your examination.